One of your biggest success stories has been investment into Coke. Please talk us through that.
When I look at something like a Coca-Cola, which has been around since 1886, I say to myself, they are now selling 1.6 billion 8-ounce servings of Coca-Cola products every day throughout the world. Everybody in this room has something in their mind about Coca-Cola, and I hope it's good, incidentally. And certainly, what are the chances that Coca-Cola will be selling more products 5 years from now or 10 years from now than presently? I would say it's almost a certainty. I mean, there will be more people. They will have more purchasing power. This product is a huge bargain. This product sells, if you buy it on weekend specials like I do, this product sells at about twice the price that it sold at 100 years ago. There aren't many products like that. So it represents, the cost of this represents for the average person maybe a minute or two of their earning power, and it provides a moment of refreshment and happy memories, all kinds of things. So will they be selling more Coca-Cola a few years from now than they are now? Almost certainly. They're Coca-Cola products. Will they be able to price their product so as to counteract the effects of inflation and so on? Sure. So it's a pretty simple type of evaluation. I can't look at some new idea. People send me these big envelopes, filled with 200 pages of diagrams about some new product or process. I don't have the faintest idea what's going on in those things. But I can understand this. I can understand chewing gum. I've got a pretty big mind here. I got my mind around chewing gum years ago. And I stick with products where I think I can really see what's likely to happen over 5 or 10 or 20 years. And then those variables that we talk about in terms of return on equity enter into my calculations. But the important thing is to be in the right business and with the right people. And if you're in the right business, you don't go crazy in terms of what you pay for it. It's just like my buying that farm. I didn't go crazy in terms of what I paid for the farm. I had an honest guy running it. It happened to be my son. And, now corn is selling, for probably, well over twice the price it was in the mid-'80s. Soybeans are selling at 3 times the price. So the farm is worth more money than before. And over the years, it's just kept delivering a check to me every year. That's what investment is about. And it's really looking at the future income potential of a business and comparing it to what you have to lay out now to get that income potential. And that's investment. And I think that when you get into buying something where you're just betting on whether people will pay a little more for it next year, when it doesn't produce anything, there's nothing illegal about it. It's not illegal, it's not immoral, and it probably isn't financially fattening either. But you're betting on really investor attitudes or speculators' attitudes rather than betting on the asset itself.
So what attracts you to that can of Coke? Is it the taste or the fact that you've bought a major share into the company?
No, I don't want you to think of me as someone who would be up here drinking Coca-Cola because I had a financial interest in it. I mean, who would do that? Be sure you get this. We get the profits. We own about almost 9% of the company, so we get the profits on 1 out of every 11 cans. So if you have any of this out there, just open the can. I don't care whether you drink it or pour it on your neighbor. But just be sure you open the can. I'll make a confession here. You'd nail me on it anyway if I misled you. I drank Pepsi for a long time. And the reason I drank Pepsi was that when I was a kid, Pepsi came in a 12-ounce bottle for a nickel, and Coke came in a 6.5-ounce bottle for a nickel. And you probably have gained enough insight into my personality by this point that you would understand why I chose Pepsi.
The trick in making money, they say in equity, is to know when to sell a share. So when should one sell a share, sir?
That's a tougher question than when to buy. Originally, when I was working with tiny sums, I always had way more ideas than I had money. So I had a portfolio very limited dollar amount, and I would find something that was more attractive, and which I felt I knew as much about, but was more attractive by a significant margin than something I held. So I would sell something I held to buy something more attractive, never to raise cash. And I was always selling things that were still cheap, because it was a market where there were a lot of things that were cheap, and I was looking for the cheapest among things that I understood. Over the years, as more and more capital has accumulated, for which I'm responsible, frequently money outruns ideas. I have more money than ideas. So now the only reason I would sell something would be if I lost confidence in the business or the management, or it became dramatically overpriced.
I'd just like to wrap it up with a question of my own, since I don't know whether you're going to pay me or not. That's actually for public consumption, which is very critical for all of us out here. I work with a television channel, a 24-hour business television channel. In India, business is commensurate with the stock markets, because everything's to do with the stock markets for whatever strange reason. And we spend a good 20 hours just talking about stocks day in and day out every day. Your philosophy has always been of patience, of buying and holding. What suggestion will you give to somebody like me, who should talk to people every day, to be speculating perhaps in the markets and looking at markets very closely, and to all of us who do look at television channels, fortunately or otherwise?
Well, you're filling a desire of a great many people to listen to commentary on stocks, and there's no law against speculating on stocks or gambling on stocks. I just don't think it's likely to be as fruitful as the sort of investing that Ben Graham taught me. But for many people, the nice thing about stocks is over time it's a positive sum game. So it isn't like a zero sum game. And even if people overtrade and all of that sort of thing, on balance your audience is going to make money if they stay there for 5 or 10 or 20 years. They may make more money if they didn't trade as much, but they will make money. They can overcome the cost of commissions because it is such a positive sum game. If you have the freedom with whoever owns the station or whoever makes those decisions to have a 5-minute per day lessons on investing type approach, as opposed to saying which stocks or whether the market's going to go up tomorrow or something of the sort, that might be a very useful sort of commentary to have, and perhaps to repeat over time. That's the only suggestion I have.
Thank you very much.
Thank you very much. It's a real pleasure. It's a real pleasure. I thought it was a great program.
Thank you.